generally speaking, I think it's coming. I think they will relax the restrictions. Look, I've said this for years, right? Right now, it's against the law to own real estate, private investments, venture capital, digital assets, commodities in your 401k. And all of those things I think are good. So I do think it's coming. Like I said, I don't know for certain whether this executive order can mandate the change. I feel like it needs to be like the Tax Act of 86, which again had nothing to do with taxes. I mean, it had a little to do with taxes, but it was really about converting from defined benefit to defined contribution and the 401k that we know today. And, again, we think it was this great gift to us and portability, but it really was as a way for corporations to give us less, right? They had to put a lot more in a defined benefit because they had to actually pay for our benefits.
Mark Yusko emphasizes what he believes to be a generational opportunity. Traditional finance has long been based on money printing, debt, and policies that favor a select few at the expense of the majority. However, we are approaching a new era when ownership, transparency, and decentralization can actually transform wealth creation thanks to the emergence of blockchain technology and Bitcoin. According to Yusko, this change is about escaping an ineffective system rather than only speculating. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you and enjoy the video.
But I think the difference here is when you have this shift in mindset that, wait, I don't have to be controlled by this fiat control mechanism. That is a very liberating thing. And that's why people who don't spend any time thinking about what is this technology, what is blockchain technology, what is Bitcoin, and a lot of people on the internet say study Bitcoin. Like, that's actually really good advice. I mean, doing the work to understand, you will, I believe, anyone who does any amount of work will have that aha moment. You had it, I had it, everyone we kind of respect in the industry has had it, and we all come about it different ways, but you have it when you see that fundamental understanding of, wait a minute, this is a better way to own things, right? Read, write, own. Since July 10th, we've basically been at the same place. We've had some highs and some lows, but we're in this, because a roller coaster, right? You go up and then you come down and then you go up, but you end up in the same place. And but the enthusiasm for me is coming from, I think we're about to enter the lock-in track, right? Where you lock in, you're going up the big hill, and I think we're going to see that. And now some would say, but wait a minute, Mark, you just said that it goes up and goes down, and if it's a roller coaster, well, what if we go in this big track, between now and October, November, then what? Well, yeah, then I actually think we're due for another bear market. Now, interesting, Saylor this week abolished winter. He said winter is not coming back, that, he basically decreed that the 4-year cycle is over. Yeah, he's a smart guy. I'm taking the other side of that. I've been talking about this really since January, and I said it would be unpopular. Everybody wants the 4-year cycle to be eradicated. Everybody wants to believe that the ETFs and the institutional demand have eradicated the, humans are going to human. At the end of the day, and people look at this and say, well, what about that big drop-off in June, July? We dropped a bunch of bombs in Iran and blew up some stuff. And people are like, what does that matter? Like, well, there were some miners in Iran that were suddenly offline. And so that's not shocking. And you can look at geopolitical events in all of the drops or the pauses in the trend that, either China banned it or, kicked a bunch of miners out. And if miners go offline, well, then there's fewer people competing, and therefore, the problem has to get a little bit easier. So the more mining capacity, the hash rate, and that's why the hash rate, if we had another chart side by side, the hash rate has made a new all-time high. And everyone tweets out the parabolic one. I'm like, nah, it's a chart crime. If it's long-term chart, it's got to be log scale, and then it would look like this. So I keep coming back to the fact that the elegance of the system is that it is designed around math. It is designed around the conversion of energy to value. And that is ultimately what each of us do every single day, right? That's what human existence is. It's about converting energy to value. And some people are really, really good at it. Some people are really efficient. Some have to work really hard at it. But systems that promote progress make those things easier.
Yusko also criticizes the conventional retirement savings plan. He clarifies that although it was promoted as an employee perk, its true purpose was to assist corporations in lowering their responsibilities. Companies transferred the risk to employees by switching from defined benefit plans, such as guaranteed pensions, to defined contribution plans, such as retirement accounts. Yusko contends that the majority of Americans' retirement plan funds are insufficient. History has shown that a single market drop can cut their savings in half. Furthermore, it is illegal to keep legitimately productive assets in retirement savings plans, such as digital assets like Bitcoin, real estate, or venture capital. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
So it's kind of those ideas, behind maybe Saylor's, let's call it dream or decree that there is more.
Yeah. He's speaking it into existence. And look, to your point, the set of policy and regulatory changes have been, universally positive, but there have been some absent. I mean, I actually, my dad asked me last night. He said we were having dinner, and he said, so when's the reserve going to get passed?
Oh,
I don't think it is actually, and you don't hear Senator Lummis talking about it every day anymore. You don't, it's kind of, and it's kind of weird, right? We got the Genius Act, and we did a great episode on the Genius Act and all of its good things. And, then they put the Clarity Act kind of on hold. And then this other bill is just vanished. I mean, and maybe it's stuck in committee. If you remember the I'm Just a Bill song from Schoolhouse Rock.
How could I not?
I'm stuck in committee. And I don't know, but generally speaking, lots of policy has been positive, and I think that is accretive and turns a headwind into a tailwind. I'm not convinced we're through the then they fight you phase. I think Jamie Dimon's still got a few tricks up his sleeve to try to slow this thing down. But the one thing that did happen this week, you said, it was a good week. It was a great week, particularly because, the executive order. Now, when Trump can't get something through normal channels, he reaches for the executive order pen. And the executive order, it's not as powerful as people think. And there's a lot of, like the first one, when they say, he issued an executive order to establish a reserve. Well, no. He issued an executive order to explore a reserve. He empowered people to explore and created a digital asset stockpile, which just says, well, we already have some, so don't sell it. We'll just call it this. But he didn't establish it. So there are certain things you can and can't do with the executive order. But what was announced was that he's going to create an executive order, and that's going to allow crypto and private and some other things, real estate, in 401ks. Now, I actually am not clear whether that can be achieved by executive order or whether it needs congressional action. My gut says it needs congressional action, but we'll see. And generally speaking, I think it's coming. I think they will relax the restrictions. Look, I've said this for years, right? Right now, it's against the law to own real estate, private investments, venture capital, digital assets, commodities in your 401k. And all of those things I think are good. So I do think it's coming. Like I said, I don't know for certain whether this executive order can mandate the change. I feel like it needs to be like the Tax Act of 86, which again had nothing to do with taxes. I mean, it had a little to do with taxes, but it was really about converting from defined benefit to defined contribution. And the 401k that we know today, And, again, we think it was this great gift to us and portability, but it really was as a way for corporations to give us less, right? They had to put a lot more in a defined benefit because they had to actually pay for our benefits. With defined contribution, they can give us some, and then they can create this mythological number that is going to compound at, even though the average 401k never compounds at that number. And that's why the average 401k is so small. And then you got the risk of market volatility causing 401ks to turn into 201ks and 101ks, which has happened multiple times. But anyway, I'm happy that we got the executive order, but I don't know that we're done yet.
According to Mark Yusko, several ventures have stopped or vanished completely, despite the fact that recent legislative and legal reforms around digital assets have largely been good, while certain measures like the Clarity Act have been placed on hold and some proposals appear to have disappeared into committee limbo. He points out that initiatives like the Genius Act showed promise. According to Yusko, there is still room for improvement and the potential for opposition from established financial institutions who would attempt to impede the uptake of cryptocurrency. Even if the current executive order doesn't fully execute changes, he still views it as a significant step. The ruling formally recognizes cryptocurrency as more than simply magic internet money by enabling agencies to investigate the creation of a digital asset reserve and stockpile. Yusko warns that in order for some improvements to be fully implemented, such as permitting digital assets, real estate, private investments, and venture capital and pension plans, congressional action may be necessary. He notes that the scheme itself was initially intended to transfer risk from firms to employees, and that the current retirement savings plan regulations are onerous, denying regular investors access to extremely profitable assets. Yusko compares the development of the internet to the uptake of cryptocurrency. Similar to how the internet upended media and commerce before becoming essential, digital assets are a technological advancement that will progressively change the financial industry. These actions demonstrate that cryptocurrency is being taken seriously, setting the stage for wider adoption and integration into established financial systems, even though the path may be sluggish and opposition may still exist. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.